building off what you just said in the evolution of this market and the response that's typical of incumbents when a discounter comes into the market and seems to grow from a very small base off the radar to an explosive market presence. And in the UK, I think we've seen 6-7% market share increase for the discount channel just over the last 5 or 6 years almost. So what is it about, and just to make a point of that, we've seen this happen time and time again across markets that Aldi and Lidl enter, that they're ignored, that they're described as irrelevant by the incumbents. And within a matter of years, it's all anyone can talk about, especially on the downside for the shareholders of incumbent retailers. So why is it that incumbents keep missing this across markets where this playbook has been executed on time and time again by the discounters?
Well, I've been thinking long and hard about it. Why do they do it? It's not such a difficult exercise. One answer I've been coming up with is the ownership structure. The discounters and many of the German retailers are in, let's call it, private ownership. The discounters in particular, Aldi and Lidl are. The other discounters are partially privately owned. So none of those retailers is publicly owned and in many shareholders' hands, if you like. Many shareholders' hands mean many people have different interests. Many people actually want to get a high interest, a high return on their investment into that retailer. There were times when some of the big four retailers were having, God knows, bottom line results of 5 or 6% on those lines. And of course, if you get as an investor, as small as you may be, get used to those kind of returns, it'd be difficult to say at some point, well, what we need to be happy for the next 5 or 10 years with only 1 or 2%. But exactly that difference is what would be needed to fight off with price investment, with investment into your store portfolio, capex, etc., to make sure you don't allow the discounters early on to start breathing. This is a machine, and if this machine, the discounters, are start rolling, it is a very, very expensive way. You can only fight them off. In the instance of the UK, I believe it's too late. They've reached a critical mass of around about 500 stores each. And for every store they open now, their fixed costs, if you were to take the headquarters, they don't need an additional amount of people anymore. This is just adding to their profitability now. Yeah. And I'm not even saying that they're always just constantly profitable, because the pound exchange rate is causing headaches as well. But you have to say, back to your question, fight them early on if they were to enter the market. Do not ignore them. And I think it's just that game, if you've seen that a retailer is really successful somewhere else, take them serious very early on and do not ignore them just because they only have 10, 20, 50 stores. Fight them on and take them serious as if they would already have 1,000 stores. I think that would have to be the lesson. And the only country I could see where this might still be possible would be the US. Too late in the Aldi instance in terms of Lidl. They've reached a little bit more than 100 stores now. There were price investments, but for how long they were from the biggest players in grocery, and how adamant they are about investing and really scrutinizing and making sure that they are not allowing the discounter to breathe, remains questionable.
Mm-hmm. This point on critical mass, or when a discounter really does become dangerous in a market dominated by incumbents, and the US does really come to mind as an interesting example of this, or as an applied case study. Ronny, what is it about 500 stores? What is it about? Could you talk us through the scale that's reached and what that actually means for the discounter model to really fire up?
Well, that example is and has been taken by me for the UK. Obviously, that critical mass will be different for so many reasons and points for every country. The general price level will play a role in every country. the strength of your competitors will play a role, the number of stores, etc., of your competitors will play a role, the supply base will play a role as and when you reach that critical mass. But in the instance of the UK, this is in and around the time. What I'm trying to say is the discounters will have a certain level. They might reach that in some smaller countries already at 100, 150 stores. You as the established player should be aware of when that could be. It's easy enough to rebuild that model in terms of calculating that given the price levels the discounters are operating on, and just take that fight very early on rather than just waiting. What I mean in very clear terms by that, every new store opening of a discounter would have to be with an individual attack of my own stores against that opening of a discounter. And whilst we're talking about working against that competitor, let's be honest, for me, that's not even something different if any other supermarket would be opening. But in particular with the discounters and them reaching their critical mass, it's so important to not allow them to come to that point.